Hello viewers, welcome to BR Ambedkar Open University. In this session, I am going to discuss about the advanced accounting. In that advanced accounting, block 1, unit 1 is the hire purchase and installment purchase system. Already we discussed about the previous semesters, we learned many accounting treatments. Now, in advanced accounting system, we are going to learn hire purchase and installment purchase system. What is the meaning of hire purchase system? See, when the customer is want to purchase some products, when he is not able to spend huge money on that product, even when he has a desire to purchase that product, he is going to get the product with using of this system. It means what? In the hire purchase system, whenever we want to purchase any product, when you are not able to spend that total amount on purchasing of that particular product, even the seller will give the option to the buyer to buy a product on credit basis. So, in this system, at the time of purchase, we are going to pay certain amount and remaining amount we are going to pay in installment basis. So, that facility will provided by the seller to the buyer. Coming to the our topic, hire purchase system. So, hire purchase system, here the hire purchase system, it is a very small system. Whenever customer want to purchase anything, he need not to pay entire amount. He can pay at least 20 to 30%. Remaining amount he is able to pay whatever option given by the seller to the buyer, that according to that agreement, according to that conditions, buyer can pay the payment to the seller. So, this is the facilities which is given by the seller to buyer. And the hire purchase system, as the very name indicates, is a combination of two modes of processing the goods by hiring them by purchasing them, either it may be cash or credit. So, in this hire purchase system, some of the important terms we need to discuss. So, in that terms, the first one is hire purchase price. So, hire purchase price means what? The cost of the price, the cost of the product. So, this hire purchase price includes whatever the cash amount, cash price is there, the product price, that, and interest charged by the hire vendor. The combination of cash price plus interest is called as a hire purchase price. For example, one product is there, we need to buy one mobile, that cash price is the mobile cost is, for example, 10,000. So, when you are going to pay immediately 10,000, you will get the product, but you are purchasing according to the hire purchase system. So, that time that cash along with cash price, we have to pay the interest also. The aggregate of cash price plus interest paying by the vendor, that is called as a hire purchase. So, next one is the how to calculate this hire purchase. So, hire purchase is equal to whatever the cash price is there, product cash price plus whatever installments included that interest, the interest plus cash price, it is called as a hire purchase. Cash price. So, cash price means what? Next term is cash price. Cash price means what? Whenever you want to purchase any product, the original cost of the product is called as a cash price. So, in this cash price, directly the product cost only it is going to be included, and it is payable by the buyer to the seller on purchasing time only. At a time is going to pay that. So, that is called as a cash price. Next one is the hire purchaser. Who is the hire purchaser? Who is the hire vendor? So, Here hire purchase means the person who agreed to buy on a product according to this hire purchase system as per the conditions of hire purchase system, he is called as a hire purchaser. Then for example, in this hire purchase system two parties can involve, seller and buyer. Generally seller can sell the goods to the buyer. So, buyer what is going to do? He is going to pay the some money down payment and remaining payment is willing to pay that installments. So, the person who is going to buy any product under this system, he is called as a hire purchaser. Next one is the hire vendor. Hire vendor is nothing but a seller. The seller, the person who is going to sell according to this hire purchase system to the buyer. The person who agreed to sell his product to taking of down payment and remaining amount is going to accept in installment basis from the buyer. So, that is called as a hire vendor. Next one is the down payment. So, down payment means what? At the time of purchasing, whatever amount we are going to pay as a cash, so that is called as a down payment. So, this is also called as a cash down payment. Generally every product, for example, if you observe automobile industry, we are going to buy the vehicles. So, what happened at the time of purchasing, when you are not able to pay entire amount, 20 to 30% you are going to pay, remaining amount we are going to pay installment basis. So, that is nothing but EMIs. So, down payment means what? Whatever the amount which we are going to pay at the time of purchasing. So, that is called as a down payment. Next term is what? Installment. So, installment means what? Whatever hire purchase agreed to pay after payment of down payment to the hire vendor. So, whatever remaining installments paid by the hire purchaser to the hire vendor. So, that is called as a installments. Generally in this installments we are going to pay principal amount as well as interest also. So, this installment includes principal as well as interest also. Next one is the net cash price. What is the meaning of net cash price? So, net cash price means, for example, after payment of down payment, whatever the when the cash price is given in the about the product, after deduction of down payment, so that amount is called as a net cash price. For example, one product cost is equal, one product cost 1 lakh rupee. So, down payment I paid as a 25,000. Remaining amount how much I have to pay? 75,000. So, that 75,000 is called as a net cash price. So, here net hire purchase price. Next we need to know about the net hire purchase price. So, net hire purchase price means what? Whatever the actual hire purchase is there, after deduction of delivery charges, any other expenditure which are incurred. So, that all are we treated as a net hire purchase price. What is the features of hire purchase system? See, in this system I already told two persons are involved, that is hire purchaser and hire vendor. When hire vendor sold his product to the purchaser, immediately position of the goods is going to be transferred. So, it means what? That product is going to be transferred, and this is the first feature. So, at the time of payment of down payment, immediately buyer can acquire the asset, he can take the asset with himself. Next one is payments in installments. So, after whatever down payments we paid, remaining amount we are going to pay installment basis. Okay. And ownership after final payment only transferred. It means what? See, we are talking about the hire purchase system. When you are purchasing any product, that time we are going to pay as a down payment. So, after down payment what happened? immediately we are going to get the position of the goods, but ownership will not get. So, ownership with whom? Hire vendor only, seller only having by the ownership. When ownership will transfer from seller to buyer? After payment completion of all the installment by the buyer, then only seller can transfer ownership to the buyer. So, it means what? Ownership after final payment only received. Okay. So, down payment requirement. So, down payment requirement means what? As per conditions, generally 15 to 20% of the product cost we are going to pay that. And interest. So, interest already earlier I told, interest included in the installments only. Okay. Next, right to use of goods. So, when hire purchaser purchase the product, he has a right to use of that product, he get the position. So, in the features of hire purchase system, as I told, immediately position of the goods is transferred from seller to buyer. So, it means buyer can use that product, he has a right to use that. And next, right to terminate the agreement. So, when right to terminate the agreement, if buyer fails any installments, he is not able to completion of his payments, all installments. So, seller can right to terminate the agreement also. At the same time, reposition by the hire vendor. So, for example, generally in our real life also we are going to observe any automobile, any motor vehicle, when the installments are pending is there, that finance company will take over. Okay, the finance company will take back his properties. Same here, that right to terminate the agreement by the hire vendor, at the same time reposition by the hire vendor, and it is a legal agreement. Generally it is suitable for the expensive goods. Generally in middle class families we are going to observe that we are going to purchase that washing machines that cost around 40 to 50,000 will involve. So, when you are not able to spend that 40 to 50,000 at a time, we are going to buy like this only. So, mobile phones you can take, any automobiles also. So, like that. So, that is the these are the features of hire purchase system. So, in this hire purchase system, how many types of problems will come, how to solve the problems, that we need to know it. Generally in hire purchase system, 5 types of problems will ask in the examination. First method, generally every detail they are going to give. They will give the price, cost of the product, they will give the down payment, they will give the installments, they will give the interest rate, they will give the even if it is required depreciation also they will give. So, when all the information will give, how to calculate how to analyze, how to prepare the analysis table of hire purchase system, and how to prepare the accounts in the hire vendor account. As of now, we discussed about the what is the meaning of hire purchase system and what is the features of hire purchase system and who are involved in this system, that all are we discussed. So, now what are the types of problems will come, how to solve it, now I am going to explain. So, before solving the problems, we have different situation problems in the hire purchase system. So, among that all, first one is when all the particulars are given and installments inclusive of interest. See, it means what? Purchase cost they will give and install number of down payment, down payment amount they will give, number of installment they will give. So, even that installments also included in interest. That time how to do that? This is the case number 1. Next, situation number 2, the problems when there are different amounts of installments but inclusive of interest. So, it means what? What is the difference between first one and second one? So, first case, equal installments, here different amounts of installments but inclusive interest. In the same cases it is going to be same. Interest included in the installment, but in the first case only installments are equal, but in the second case what happened, installment amount is different. This is the second case. So, next one is third case is what? When the installments are exclusive of interest. It means what? They will issue the down payment amount and installment amount, but that installment does not included that interest. This is the third case. Next one is what? Fourth case. Next one is fourth case, the calculation of interest when the rate is not given. Fifth one is what? When the cash price is not given, how to calculate the, how to analyze the, how to calculate cash price and how to determine the installments with interest. So, these are all the situations we are going to solve it. So, now 5 situations I already explained. So, first one is what? When all the information is given. Second one is what? All the information is given, but different amounts of installment. Third situation, that is interest is exclusive. Fourth situation is what? Interest rate is not given. Fifth situation is what? Cash price is not given. So, these situations only they are going to ask the problems. So, now I will explain. So, from this problem, if you observe it, from the following information, following are the particulars relating to the hire purchase system. Purchaser, who is that? BRAOU and company, and seller SHAMO and company. So, date of purchase is what? January 1st, 2016. So, this is the information which is given by the problem, and cash price is what? 12,894. The payment is what? 2,000 on agreement. This is nothing but a down payment, and remaining balance they are going to pay installment based only. So, that is 4,000 of each installment. So, every 31st December year ending they are going to pay. What is the rate of interest? 5% and depreciation is 20%. So, this is the problem. So, when they will give this type of problems, you have to write the, you have to prepare the analysis table. So, analysis table, how to prepare that? So, in this table generally 6 columns involved. So, first date of purchase and opening balance and down payment or installment, then interest, then actual interest. Actual interest means what? Excluding of, actual installment means what? Excluding of interest. Next one is balance of amount. So, from this information, we have to prepare this analysis table first. So, analysis table how we are going to prepare? First one is what? Opening balance they already given 12,894. At the time of purchasing how much they paid? 2,000 they paid. So, end of the year how much balance left? We have to pay 10,894. So, this 10,894 after payment of down payment, then this 10,894, what is the interest rate we have to pay? 5%. So, that 5% is nothing but a 548. So, our installment is what? 4,000 rupees. So, 4,000 rupees minus 548, remaining what? 3,552. It indicates what? 3,452 is the principal amount, 5,048 rupees is the interest. So, after first year, you have to deduct first installment, principal only. So, from 10,894 to 3,452, after deduction of this 3,452, the balance due is 7,442. After second year, these 7,442 again 5% interest included, that is 372. So, total installment how much? 4,000. In this 4,000, 372 is the installment interest and 3,628 is the What is that? Principal amount. So, after payment of this installment, balance is 3,814 rupees. So, end of the year 3,814 rupees we have to balance, but this is only principal. So, remaining how much we are paying third installment? We are paying 4,000. So, after principal amount 3,814 rupees, leftover amount treated as a interest, that is 186. So, like this first we have to prepare the analysis table. So, this is situation is what? When all the information is given, like cost price they are given, interest price interest rate they are given, and installments also they are given. Even installments also equal installment. So, in this case we have to prepare analysis table like this. Yeah, previously we discussed about the when entire information given about the hire purchase system, we did analysis table. Now, case number 2, when there are different amounts of installments, but inclusive of interest. What is the difference between previous and this one? Previous installments are equal, but here installments are different. You just go through this problem. X purchased a machine on hire purchase system to total cash price of this machine is 31,960 rupees. 31,960 rupees, and payable rupees 8,000 down payment. We discussed about the when all the information is given regarding the hire purchase system. It means what? Cash price they given, interest rate they given, down payment they given, installments also they given. But case number 2, what happened? When there are different amounts of installment and but inclusive of interest. So, what is the difference between previous method and this method? Installments are only different. There is a equal installment, in this problem different installment. If you see this problem, X purchased a machine on hire purchase system. The total cash price of this machine is 31,960. Payable rupees at 8,000 down payment, and installment is 12,000 rupees, 10,000 rupees and 4,000 rupees. So, these are the installments. This installment payable at the end of the year and first and second, third year respectively. Interest charged 5% only. Okay. The charge depreciation 10%. That is the machine depreciation, again we have to calculate separately. Is it clear? So, previous method and this method is same, but difference is what? Only there is a equal installments, in this problem different installments. So, I will explain now how to prepare the analysis table. So, year 1 beginning, what is the opening balance of the machine? 31,960 is the opening balance. At the time of payment, down payment, how much we paid? 8,000 we paid. Okay. So, after payment of down payment, after payment of 8,000 as a down payment, what is the remaining balance? 23,960 rupees is the remaining balance. So, end of the year, first year, we have to pay this, on this price we have to pay interest. So, 23,960 rupees, 5% interest. So, in this method what I told, every installment included interest also, not exclusive. So, first I calculated 5% of interest on 23,960, then I got that interest 1198 rupees after calculation of 5% on here. So, total installment how much? 12,000. So, interest is we know already, we calculated, that is 1198 rupees. So, after deduction of these 1198 rupees from your total installments, actual installment paid you will get it. So, that actual installment how much? 10,802 rupees. So, this 10,802 after payment of first year, What is due balance of principal? 13,158 rupees. Again 13,158 we have to calculate on due balance only, we have to calculate interest. You have to remember this point. So, 13,158 5% we have to calculate, that is 658 rupees is the 658 is the interest. So, our installment how much? 10,000. Our interest rate interest also we know that 658. What is the principal amount we paid in the second installment? 9,342 rupees we paid. After payment of second installment, what is the due balance is there? 3,816 rupees. So, these 3,816 rupees is the final installment. So, final installment actually how much we are paying? 4,000. So, 3,846 is the principal amount, remaining whatever the amount is there to reach the 4,000, we paid 4,000 rupees, that 184 is the interest. So, like that we have to prepare the analysis table. Then after we have to prepare the accounts also. So, here depreciation we calculate. When you want to prepare the machinery account, you require depreciation. When you want to prepare the hire vendor account, seller account, you have to prepare the whatever the transactions happened with the hire vendor. Here the to prepare these two accounts, you need to know the some general entries. So, generally when you purchase machinery, what is the general entry we are going to write? Generally in the how to show the in a hire vendor account, books of hire vendor. So, here machinery what happened? When you purchase machinery, what happened? From seller to machinery will go out. Okay. He will receive the cash. So, he will receive the cash. Is it clear? So, asset is going and cash is coming. So, when asset is going as per real entry, what is the general entry? Okay. What is the general entry? The hire vendor account data to cash account. When he sold that, okay, he received the cash, that is 8,000 rupees. Generally here in hire vendor account, all incomes we are going to show credit side. Okay. All incomes, all income means what? Buyer can pay the interest to the seller, it is income for hire vendor, so that we credited to the account. So, total how much buyer need to pay? Machinery cost 31,960 rupees along with interest. So, why all whatever the amount received by the hire vendor, that is debited, because his balance is day by day receiving. So, that we are writing debit side all installments which is paid by the buyer. Okay. So, here what is that cost of the machine? Here machinery account data to cash account. So, machinery 31,960 rupees already I credited to the hire vendor account. So, after that what happened? Interest. So, interest paid by whom? Buyer to seller. Okay. So, seller to buyer to seller he received. So, interest is the income to the hire vendor. So, that total machine cost plus first year he need to receive that, what is that? Interest 1198 rupees, which is done. This all the information we taking from the this analysis table only. Okay. So, here total actually 31,158 rupees. Then what happened? At the time of down payment he already paid cash, that is 8,000 I deducted. After first installment 12,000 paid, what is the remaining balance? 13,158 only. Thus, 13,158 balance brought down into the next year. So, after second year what happened? Second installment also paid and interest also received. So, remaining balance we transfer to the third year. So, like that hire vendor account we have to prepare. So, generally in this problem small logic only required instead of learning all these things. Whatever interest paid by the buyer, whether it is income or expenditure to the vendor. First we have to think it. When it is a income, that you have to credit to the his account. Okay. So, from out of his total balance, when he received remaining balance only, leftover balance only, we are going to carry forward to the next one. So, like that we have to prepare. Then what about this machinery cost? So, in the machinery cost, simply we have to calculate depreciation only. Whatever their method they are asking, either it may be straight line method or written down value method. So, machinery cost, machinery account we have to prepare. How we are going to prepare that? So, machinery account data to hire vendor account, okay, the total machinery cost, and depreciation always we are going to debit to the machinery account. So, first year after depreciation 10%, remaining balance is 28,764. The same amount I brought forward to the next year, again I calculated depreciation for second year also. So, here the depreciation amount is same 3,196, 3,196, because in the problem itself they said that 10% is the depreciation, that is straight line method. So, that thus when the given straight line method, every year depreciation is same. So, second year also I deducted 3,196, balance is 25,568. Next year also same, from 25,000 to 25,568 minus 3,196, end of the third year the machine cost is 22,372 rupees only. So, like that the machine value end of the 3 years we have to calculate. So, like this we have to prepare machinery account and hire vendor account. So, these are the two methods. So, what are the methods we learn? In the hire purchase system, when the all information is given, when the installments also same, that is the first method. Second method, all information is given, but installment amount is different. So, this is the second method. Next one, in the next class we are going to learn remaining methods. Thank you.